My name is Garth McKenzie. I'm a technical analyst and an ETF strategist with traderscorner.co.za. Today, I'm taking a look at the exchange rate, the Rand dollar exchange rate in particular, and pointing out a couple of significant developments there. The first slide here shows the long-term chart of the Rand dollar exchange rate. And you can see that this is a very volatile currency. It has periods where it blows out quite significantly, and then it has lengthy periods where it can recover quite significantly as well. And where we sit right now is one of those blowout periods. It's come about on the back of the COVID-19 epidemic and the risk off environment that has been associated with global financial markets, and particularly in emerging markets recently. But if history is any guide, then this type of blowout often is then followed up by a recovery in the Rand versus the dollar. Now, the next slide, it takes a more recent look at the Rand versus the dollar. This looks at the trading history over the last 3 years. And what's quite interesting to note here is the breakout of a major ascending triangle pattern. And that occurred on the move through 15 Rand 50 to the dollar. Now, that's seen the currency blow out significantly. It's weakened by nearly 40% during 2020 to the current levels. And it's currently trading in near 19 Rand to the dollar. It's a very, very oversold currency at this point in time. And what I wanted to focus on in my next slide is the distance away from the 200-day moving average. And this is some analysis that I did recently, and I just think it's interesting to point this out. The fact is that the Rand doesn't often move more than 20% out from its 200-day moving average. And when it does, that's generally an indication of a massive blowout, and you don't find it stays there for very, very long. And the way we see it at the moment, the Rand is currently 23% weaker than its 200-day moving average, which implies, if history is any guide, it implies that we're probably at very, very oversold levels for the Rand, and it's likely to recover somewhat from these levels. The next table takes a look at some performance history, looking at the Rand when it's been more than 23% weaker than its 200-day moving average, which is what it is now. And it looks forward. And what you can see there is that after 20 trading days, the currency is typically 2% stronger. After 60 days, it's about 4% stronger. But where it really gets interesting is on the longer term. After 120 days, 6 months, the Rand is typically 12% stronger against the dollar. And if you look further out 1 year or 250 trading days, then you'll find that the Rand historically has strengthened by 20% from when it's at such oversold levels as what it is right now. My final slide takes a look at the recent trading activity on a daily chart of the Rand dollar exchange rate. And what you can see here is the steepness in the trend as the currency is weakened and blown out over the last month or two. But what's also notable is that there is negative divergence on both the RSI and the stochastic oscillator. And it appears now that the currency is starting to actually break its recent most steep upward trend. And that to me signals the likelihood that we probably see the Rand moving down towards 18 Rand to the dollar. And if it can break down below 18 to the dollar, then it would validate a double top pattern. And that would then signal potential for it to move even stronger, probably down in towards 17 Rand 50 to the dollar. So keep an eye on this. It does look to me as if the Rand's blown out, and it looks like it's got the potential to stage a bit of a recovery from these very oversold levels. That's all I've got for this episode. I'll be back again next week with some more market analysis.